Your banking relationships are going to be the absolute center of your financial stability and eventually your financial abundance. I'm going to give you 3 tactics, action steps that you need to take to fortify your banking relationships ASAP. The reason for that is because JP Morgan Chase, Jamie Dimon, has come out in a recent article, as well as other analysts and prominent sources of information, including the Federal Reserve themselves, making it abundantly clear that not only is a recession looming, but it is necessary in order to tame inflation effectively. And the recession is code word for a slowdown in the economy, which is all the opposite of inflation is deflation. They need less spending, they need less money flowing around, they need asset prices, and they need goods and services to come down. With that having been the case, that means the Federal Reserve is going to continue to likely raise interest rates in the near future and hold them there for an extended period of time. JP Morgan Chase is not the lord over the economy, but they are the largest bank in the United States, one of the largest financial institutions in the world, one of the closest to the federal government, one of the closest to the Federal Reserve, and also on their books has literally some of the richest and wealthiest investors in the United States and in the world that they can pull insights and pull data from. With this being the case, they're a pretty credible source about where things are likely headed. With the looming recession, honestly, coming down the pipeline in the coming months, next 3, 6, or 9 months or so, you need to be in the best position possible in order to make sure that you're stable and hopefully able to grow through these economically tough times that we're about to embark upon. The number one thing you need to do when you go to your bank is hopefully you either have a bank with a tangible location, or you're just really good at understanding these banking products and understanding strategies with your banking. You can do this on your own, but you need to get with a banker in person who understands that bank and their products and reviews your existing relationship, checking accounts you're in, the savings accounts that are available to you, the way your money's set up in that account, and what features and benefits you're using. Hang tight with me through this. Do not get bored or distracted. I promise you this is going to make sense by the end of this video. You need to sit down with a banker or personally analyze your relationship with your primary bank or primary banks. By doing so, you want to make sure you're in the highest ranking checking account that they have available. Checking accounts are the center hub for private commercial banks when it comes to the client relationship. For credit unions, it's often savings accounts. You need to make sure that you're in the best, highest ranking account that you can afford to be in and get the most use out of. That goes across any level of products that you're using, and you need to be using as many products as you possibly can. The way you're going to do that is by step number 2, or part of the way you're going to do that is step number 2. That's going to be fortifying your income. No matter what is going on, you need to make sure W-2 job, gig work, freelance work, business activity, wherever your income sources are, you need to fortify and protect them by all means through this upcoming recession that we're likely going to be going into. You doing so is going to allow you to cash flow the money coming in to keep your banking relationship thriving. It's going to keep money flowing in, money flowing out. It's going to make sure that you're able to use more features, benefits, and products. And that's what banks are going to be looking for. The third thing is going to be supported by the first 2. And that's going to be maximizing the credit with that institution. If you have one credit card, look into the second one, or look into a limit increase, or look into both. You have 2 credit cards, see if there's room for a third one. You need to be maximizing and making most out of the banking relationship, because your goal is going to be as sticky as possible to this institution, so they look at you as one of the last clients that they want to lose. Why is this relevant? How does this tie back to a potential impending recession? During a recession, liquidity starts to dry up. That basically means banks will continue to be more and more skittish to lend money out. When they're being more and more picky to lend their money out, they're going to be picky by weeding out the customers or clients that they feel like are the riskiest and that they have the least relationship with. You don't want to fall in that bucket. You want to be the one that they look at over their books and say, this is somebody that we want to do business with. This is somebody who has a strong connection with us and we can continue to grow with. They have great financial habits. They're using our products and services, and we're confident we have more than 50% of their banking business here. When banks see that, you will be one of the last clients that they are going to threaten with any kind of credit limit decreases or denials. I can assure you of that. With that being the case, coming this recession, people always quote that recessions are the times where millionaires are made. Well, that only works if you have access to financial resources. So what that means is your center hub for the financial resources, the banking relationships you have, need to be fortified. You fortify them by using the highest level and as many of the products and services available at your bank, making sure your income is sturdy so you can continue to maximize those different products and services with direct deposits, filling up savings accounts, using CDs, on and on. Those things will lead to you having access to more capital. It not only protects the current limits that you may have on your credit cards, but it offers you, it kicks the door open for new available credit. These banks are still gonna need to lend to somebody to keep their doors open. So recession does not mean they close the doors on lending. It just means they're gonna close the door on people who they don't feel they can trust or that they feel have enough skin in the game. So what you wanna do is follow those 3 steps in order to protect your access to financial resources, your access to capital. Because what that's gonna do, that's gonna allow you when this recession starts to kick in and it starts to go, trough and starts to go back up, where we start to have a healthy economy again and rates start to come down, money's being spent, liquidity's being pumped out. Asset prices and business opportunities are gonna be plentiful. If you're in real estate, if you're looking into buying or acquiring or expanding an existing business, these opportunities have not really hit yet. There's a lagging effect to the interest rates. There's a lagging effect to the economic outcome of the monetary policies that we've experienced since 2022 and here in 2023. So you are not missing anything yet. So you need to make the moves to make sure you have access to capital, great credit limits, high HELOCs, if you need business line of credit, home equity line of credit, making sure you have access to capital and making sure that you have access to financial resources so money can flow in and out smoothly will allow you to capitalize on amazing opportunities that I can assure you in the next 1 to 2 years, maybe 3 years out, will be coming. This is going to take strategy, patience, and discipline. Follow this to a T, and I guarantee you, you will be in the perfect position to strike at whatever your investment strategy plan is, your business model plan is, business acquisition plan is. This is how you're going to get it done, maximizing those banking relationships. To all my pioneers out there, welcome back. To my new viewers, welcome in. I want you guys to like, comment, and subscribe. Comment down below and let me know what your banking relationships look like currently and what you plan to do with the information that you got in this video and what you can add to this conversation that has been initiated in this video. Comment down below and let me know. Want to learn more about the channel and how to support it? Links in the description. Go check it out. Other than that, I want y'all to stay focused, stay in motion. I'll see y'all soon. This is JP from Blueprint for Prosperity Network, a channel dedicated to helping you increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity.